morning. My name is Şebnem Elif Kocaoğlu Ulbrich, and today I'm here to talk to you about embedded finance and its impact on the service and the retail sectors. Before we start, just a quick word about myself. I'm a Berlin-based strategy consultant and author specialized in fintech and legal tech. I'm actually a full qualified lawyer, and I have over 12 years of experience in the banking, tech, and the legal sectors. I'm really looking forward to meeting you all after today's session. So before we start talking about embedded finance, we actually need to stress the importance of fintech in the financial sector. As you all know, fintech significantly impacted the financial sector. So fintech disrupted and ended bank monopolies. Fintech introduced new market players, new financial players in the market who challenged the status quo of the market. And these new financial players showed us that a new way of banking is possible, and alternative banking is possible, and that customer comes first. And what is happening today in the financial markets is that we see the banks and the financial institutions that do not put customers first, that do not keep up with the market trends, disappearing. And this is actually an end that awaits a lot of other companies too, regardless of their vertical. So if you, as a retailer or as a service provider, haven't invested in customer satisfaction, haven't embraced customer needs, and haven't kept up with the industry trends so far, I'm afraid to tell you that your business might be in danger. And what you can do to get back in the game, to get back in track, is to basically start offering new experiences to your customers. And you can do that by investing in new technologies. You can do that by finding new distribution channels, new cooperation partners, and readjusting your business model if needed. But this also means that you need to start letting your customers choose from now on. This means that you need to respect your customers' choice, and you cannot dictate your choice, your preferred distribution channel, your choice of payments to your customers anymore, but you need to give them a selection of tools and services for them to choose from. As a retailer or as a service provider, you cannot launch a Shopify website with a couple of outdated payment methods and expect to be successful anymore. Because your competitors are already out there, they're offering a selection of tools and complementary products to your customers. And these companies that are going above and beyond are already exceeding expectations and are what embedded finance is about. And these companies are already leaving their mark in the market. So embedded finance is actually about integrating financial solutions and offers into non-banking verticals. And when we're talking about non-banking verticals, we're talking about a very large spectrum. We're talking about gaming, we're talking about fashion, health, we're talking about education, traveling, and you name it. So no matter which vertical you operate in, you have to understand that financial services are an integral part of your business and will remain to do so. So the companies that have understood that have already started investing in embedded finance. And because of these companies, embedded finance started gaining traction, but the demand for embedded finance have actually gained more traction this year compared to the years before. And it's actually due to COVID-19. As you know, during the lockdown period, many customers didn't have access to offline shopping channels, and this pushed them to start or increase their online shopping behaviors. And these new online buying behaviors and habits are seem to be sticky, seem to stay nowadays, because we see these customers that have started e-commerce during the lockdown period still continuing online shopping and e-commerce, although they have the option to not do so. And basically this shows that these habits are here to stay. In addition to that, we also see the customers that have started trying fintech products and digital finance products during the lockdown period, wanting to continue on this track because they don't want to deal with branch banking anymore, they don't want to deal with physical money anymore. And you, as a retailer or as a service provider, have to respect the customer, to stay on track, and to make sure that you're not left behind. As a service provider or as a retailer, you might ask yourself what the benefits of embedded finance be, except keeping up with industry trends. Well, I can assure you that embedded finance is actually a win-win situation for both the customer and your company. First and foremost, like embedded finance will allow you to increase your transaction speed, which will immediately convert into more shopping and more sales for you. In addition, it will mean a decrease of costs, and it will enable you to have cross-selling opportunities and also new revenue streams, especially thanks to the partnerships you'll close with new technology and financial partners. It will also mean that you can keep your customers on your platform for a longer period of time, which means increased retention, and that overall you'll have a better user journey and an end-to-end experience, which will immediately convert to an increased customer satisfaction. And this would mean that customers won't come to your platform because they need your platform, but it's because they like your platform and they enjoy your platform. And this urge to come back to platform, this sticky and the addictive feeling of a platform is basically what you want to achieve if you would like to leave your mark in the market. I tried to handpick a couple of examples, competitor examples from the market, just to demonstrate to you what you can achieve and how much you can impact your customers' lives by offering them complementary financial solutions. And the first example that comes to mind demonstrate the unique feature of financial products. So Amazon Go, an extreme example, is as you might know, a concept that was launched a couple of years ago in the US. So it's a cashierless, cashless self-checkout store that actually gained a lot of traction, a lot of PR attention for Amazon. And back then we didn't know if this was a concept that was just being tested or was here to stay. And now, a couple of years after this, these stores have been launched, we can see that this concept is spreading across industries and continents, and a lot of companies started adapting and using this store concept already. So we see Dunkin' Donuts, we see other restaurants and coffee houses, and also gas chains among across US adapting this concept, and I'm pretty sure that this concept will be more widespread in the next years to come. You can also use and implement payment features to give your customers a more luxury feeling, and this is what the Jaguar and the Shell Corporation is about actually. So a couple of years ago they launched this partnership which enables the Jaguar car owners to be able to buy gas from their car's interface without leaving the car. And back then it was a very unique and novel feature, and it set the customers, the car owners apart, which of course is a feeling that you would like to provide for your customers, especially if you're providing luxury goods or services. So you want your customers to use one-of-a-kind features that sets them apart, and even if you don't address the mass market, even if you don't want everyday customers to come to your shop, you of course want these customers to strive for your product. So when these customers change their wealth status or become affluent clients, you want these customers to switch to your product instead of any other luxury product. And this kind of luxury feature can give you an edge, can set you apart. And actually, I have to tell you that this feature, which was very new back then, is now a widespread concept, also among other luxury car providers. And I'm really excited to see the new type of innovation the car companies will provide in the next years. So we talked about luxury, we talked about uniqueness, but payment features can also be used to provide convenience to the customers. And this is what Uber and Venmo Corporation is about. So Uber customers can split the Uber rides or Uber Eats food delivery services by using Venmo. And this convenience is of course also a way to ensure customer retention and to keep customers on the platform. And last but not least, we should of course talk about Apple. As you know, an initial hardware provider, Apple is now on its way to becoming a financial giant. And Apple offers these card products which are very unique in the market. They also have these NFC-based payment products. And I have to tell you that Apple actually now has access to, or Apple Pay has access to more than 400 million customers worldwide. And this is actually what you can achieve with a unique, novel product that you work hard on, because Apple Pay is not only used to pay Apple products and services nowadays, but it's the preferred method, the go-to method for many customers across the world. So maybe, again, this is an extreme example, but this demonstrates what you can do and how you can impact your customer's life. Another way of impacting your customer's life is also integrating financing solutions to your platform, which can be complementary and which can actually remove the financial friction from your platform. So as a platform offering services or products, you might have these customers who are not aware of their finances and try to do shopping until they realize at the checkout point that they don't have enough funds or money in their bank accounts to continue or complete the transaction. So at this point, you can either let these customers drop, and I have to remind you that these customers might or might not come back to your platform when they have sufficient finances, or you can offer them a post-financing solution like Zara and H&M does. Like you can offer them a financing solution that allows them to buy now and pay later, in cooperation with Klarna or PayPal or other providers that have similar products, and you can allow the customers to complete the transaction. This is definitely a great way to ensure customer loyalty. But there's also another plus. This way your brand is always associated with positive emotions, because once you let the customer drop and you don't know if the customer will come back, if they do, they might associate your brand with negative emotions, because they might associate you with the time they had to drop out of transaction because they didn't have enough money. But now, this way, your brand will be only associated with positive emotions, because you provide them this smooth transaction, this frictionless, seamless experience that they strive for. Another example of frictionless, seamless financing is offered by Amazon. So Amazon offers its merchants merchant financing via Goldman Sachs in the US and via ING Germany in Germany. And Metro, the wholesale provider, also is aware of the financing gaps the merchants might have, and they also offer these financing solutions to their merchants via Commerzfinanz in Germany. So we talked about removing frictions and offering seamless or unique experiences for your customers, but as a platform or a service provider that is operating in a developing country, you might also be facing customers that do not have access to basic financial products. So you might be facing customers that do not have bank accounts, that are excluded from the financial system, and you as a service provider or as a retailer won't have the chance to onboard these customers because they don't have bank accounts simply. And at this point, you can either drop these customers and give up on them, or like the way the Indonesian Gojek did, or Colombian Repay, or Chinese Alipay and WeChat Pay, you can fill the market gap and fulfill financial inclusion goals and offer these basic financing products to your customers by offering bank accounts. And these companies that have initially started with niche products and services are now becoming like multi-service providers, are now becoming super apps and super platforms. And I have to say that this embedded finance and this end-to-end service mentality has a lot to do with that. Another great example from the bank account vertical is actually Google, because Google is planning to offer current accounts to customers in the US as of 2021 in cooperation with 8 banks, including Citi and BBVA. And this is actually a great representation of how you can turn competition into cooperation. I'm sure these banks had their doubts about Google entering the financial sector. They probably rejected Google. They probably feared Google, that Google will come and like take over their customers. But now they see the value in cooperating with Google, because this way Google can offer like a whole spectrum of financial services to its customers, whereas these banks will have access to Google Pay customers. They will have a brand association with Google, which means a stamp of approval and a stamp of innovation for them. So among many other use cases that we can talk about, I would like to end with insurance and investment products. And in the insurance segment, we can talk about the car and bike insurances that are offered in India by Amazon, or this Chinese service platform that started offering insurances 2 years ago and is already becoming a market leader in China. We can also talk about Amazon offering selling and buying gold features in India, and this is actually the least complementary feature in my opinion compared to the other products. But Amazon is trying to turn this urge into a need, and we'll see in the next years how sticky and how addictive this will become. But all in all, you have the chance to actually complement your products with many other services and tools. And no matter if your customers need a savings account, a mortgage product, a currency exchange product, or an Islamic banking product, you have to give your customers these experiences and make their experience frictionless. So no matter where you started the value chain as a retailer or as a service provider, you have to understand that financial products and financial services are an integral, are a complementary part of your business. And blending fintech into your value proposition is not a nice to have anymore, is a must. And the difference between retail and fintech will become more blurry in the future. So as a service provider or as a retailer, you also have to keep up and keep up with the trends and try to keep up with your competitors, because these super retail platforms like Amazon, Alibaba, and Gojek are already on their way to becoming financial marketplaces. And you, as a retailer, or as an SME, or as a service provider, also have to top up your game and step into the financial sector. Because to quote the co-founder of Plate, every company will sooner or later become a fintech company. And you, as a service provider or as a retailer, also have to keep up if you would like to stay in the game. And I would like to end my talk by saying that the right time is now, because the retailers and the service providers that are about to start integrating financial solutions into their services or products are not late, but also not early. So as a service provider or as a retailer, you might not know where to start from because you have never dealt with financial services before, or you have zero experience in this field. But I can assure you that nowadays, thanks to many financial providers, many banking as a service platforms, many payment platforms, you have the chance to onboard financial products and services into your platform in an easy, seamless, quick, and even economical way. So what you have to do is to basically start abandoning the old and traditional methods. You have to start including your customers in the process, ask what they want, what they need, and when you have the full picture, start talking to these financial providers and discuss your options. And afterwards, of course, you'll have to integrate the financial use cases in your offer. but I can assure you that this will take your product to the next level and will put you back on the right track. So I thank you all for your attention, and I'm looking forward to receiving your questions.
Thanks for the invitation. Today, my topic will be about decentralized finance and what are the opportunities ahead. My profile, for most that know me, I'm a rather early adopter of blockchain. Right now, I'm the chairman, Asia for Big One Exchange. I'm also the digital advisor, chief digital advisor with Mongolia. I also hold other appointments like chairman for Esports Association in Korea. Also a non-executive chairman for EG Association that is driving social impact. You know, and all these things are very much revolving around crypto, revolving around DeFi, and I have always been a strong voice, you know, in telling people, you know, what you can find within this whole DeFi market. You know, what are some of the key areas where, you know, you might find some good opportunities, you know. So I think right now, you know, this is a fantastic time to be in DeFi, driven by short and long-term drivers from the explosive growth of the NFT market, overtaking DeFi, which is, and then of course there's a new breed of play to earn games or GameFi, you know, to rise, and also, you know, there's a metaverse as the next big thing. So there's a lot to unpick, which is very exciting, you know, to a lot of people. And especially if you are new in this industry, you know, all these things seems to be really exciting for all of you. But let's start with some basics, you know, for those of you who are new to DeFi. So DeFi is also known as decentralized finance. The system allows people to create financial products or smart contracts per se that execute actions automatically on the blockchain without any bank, brokerage, exchange, or corporation acting as the middle person. At the end of July 2021, the capital market for DeFi products was hovering around 80 billion. While that was down from its May peak of more than 89 billion. Many believe the growth will continue in the coming year as DeFi products mature. Key to that maturity process is innovation DeFi, creating opportunities to profitability shape a decentralized future you will sure to want to be a part of. And then if you look at the non-fungible tokens, or commonly known as NFT, the NFT industry has exploded. It is really popular this year. It has more than 2.5 billion in sales volume during the first half of 2021, and it has accelerated since. OpenSea, the most popular NFT marketplace, saw more than 3 billion in sales volume during the month of August. These are big numbers, really big numbers. So what's driving the demand for NFT? Well, the fact is that digital native would rather own digital goods than the physical goods, which means that we are watching the digitalization of the collectible industry. These digital natives want to use NFT as a way to play games, transact with each other, and recreate the collectible industry. Another perspective, as outlined recently by popular game or crypto podcaster Pom, is that we are watching the new birth of a new type of status. This is what he said. Each individual would normally drop $50,000 to $1 million to buy a car, a watch, maybe a house, a boat, etc. And is now realizing you can spend the money on a digital good and flex it in front of people on the internet. So only so many friends can check out your house and be impressed, but millions of people a month see your Twitter avatar. These NFTs are a great example of where I would expect billions, if not trillions of dollars to be made in the coming years. As Pom say, just as every business had to figure out an internet strategy in 1990s, every business is going to have to figure out their Bitcoin strategy. And every business is going to figure out their NFT strategy as well. I did also jokingly say something about chief Bitcoin officer for businesses, and then I was then interviewed by one of the largest India-based tech publication a couple of months ago. While it seems like a joke, in my perspective, chief Bitcoin officer, CBO, but I think, just like Pom, I think there is a need, to think about a better Bitcoin strategy for the company, and also keeping the company ahead of your competitors by getting yourself into the digital space. And that is and that is things that we should really look at. Of course, we are also looking at many different things. For example, like a newly publicly traded fund, Meta. Now you can actually get exposure to metaverse play that are traded publicly. These are things that are really happening in space. Looking at metaverse again, we are just maybe a few weeks ago, when Mark Zuckerberg, Facebook CEO, said, within the next 5 years, Facebook would be a metaverse company. While Microsoft CEO, say that they are investing in the enterprise metaverse. Simply put, whoever can integrate NFTs and payment with metaverse may well lead the biggest change in the online culture and economy since the birth of the internet in the 1990s. A view supported, by the head of Roblox Corporation. Roblox, I think, is about 50 billion worth right now. He sees the emergence of the metaverse as a profound shift and also an intervention of internet and the World Wide Web. Well, Roblox is and has been, the leader in this space, in the game space especially. In a close fit with the vision of an open metaverse, play to earn crypto games are built on the fundamental need for a place that is available for everyone and owned by no one in particular. GameFi, gaming and DeFi, a combination, right, came about. It is referred to the intersection between blockchain-based games and decentralized financial instruments in all their in all the different terms like yield farming, lending, staking, and so forth. This form another ecosystem. So crypto has been looking for a mass market use case, to be really honest about this. And gaming sector is definitely a very good entry point for people who have been hyping for a long time, who have been trying for a long time. It is the first area of crypto where average Joe, without understanding too much of crypto or blockchain, can participate. And this is a great entry point for crypto, to be real honest. And the rise of GameFi associated tokens has captured the attention of wider crypto market, especially in the longer term trend of NFTs and metaverse. The goal is to support developers and create GameFi projects by building decentralized content. I have been looking at a lot of all these different news in the market and so forth. If you look at the market, other industry leader, talk about NFT is going to be the next big thing that makes DeFi, NFT, together. GameFi is the one that connects everything together. Maybe another striking example on how the rise of GameFi is driving the value of tokens in the early August for XL Infinity. Well, they are a popular crypto gaming platform on Ethereum, which rake in more than 220 million in revenue in 30 days to early August, making it the top revenue generator among all DeFi protocol and blockchain, Ethereum included, according to the data from Token Terminal, if I'm not wrong. So this has changed, how people look at how people look at DeFi, how people look at NFT, how people look at GameFi, for example. Not surprisingly to this phenomenal price growth, it has caught a lot of new traders, and crypto market watchers' attention. XL Infinity has been on an absolute tear recently. The play-to-earn platform has become the face of a new integration of crypto gaming that holds to unbelievable potential. XL has surpassed 1 million daily active users and is generating more revenue, than many other protocols, or other major platforms. So this growth is really different. One of the key problems associated with such a rapid growth in the DeFi maybe in the whole DeFi ecosystem, is the increasing transaction fee, particularly the rapid increasing Ethereum gas fees. To address this issue, many projects in the crypto space are starting to offer cross-chain functionality. One of the most successful innovators in the space has been Polkadot. The price of a Polkadot governance coin has raised over to $30 from under $10 in August. This put Dot's market cap to be about 30 billion or so, about the size of Ethereum a year ago. Another thing, or another coin that is worth noting is Solana, recently also listed on our Big One exchange. As they are another Ethereum killer with lightning fast transaction at a fraction of a price. The rapid increase in value is largely a result of crypto gaming and successful NFT launches. Amid huge NFT sales resulted in a bull rally, for SOL, and its price has taken which trading at $1.60 during the start of January, and then smashing an all-time high at 194.82 cents on 7th September. So look at what we have seen so far. The opportunity has been very obvious, for all of us, those that are in the space right now, in the DeFi space, and also for new institutional investors, who are looking at new chances to get into the space. GameFi, decentralized finance as a whole, act as a very good bridge and entry point for all these serious investors to get in. Let me conclude this whole speech about the opportunities for everybody. I think opportunities are everywhere, for the crypto space. Many times it comes really fast and you might not be able to catch that. This is very normal. So all you need to do, is to get yourself in the space, understand the space a bit more, and then spotting the new trend coming on board will be a lot easier and a lot faster, than just than just looking at news, or depending on another a young guy or another advisor of yours, right? You as a business owner or as the leader of your company who is looking at innovation, who is looking at driving new opportunities for your company, you and yourself got to be in the space. If not, when people tell you about GameFi, you will say, what is that? When people tell you about staking, you didn't know the mechanism behind it, right? So you have to be in the space to understand what it is. And again, I always try to also warn everybody that, you need to do your own research. Do your own research before you get yourself into any form of crypto investments or crypto buys and so forth, because you have to be responsible for the things that you have done, for the investment that you have made, for yourself and for the company. So please, talk to the right people, get the right trend, and the doors to new opportunity will just be really, really around the corner. So with that, I'm going to end my speech. And thank you very much for the invitation. And if you have anything, if you need to reach out to me, you could reach out to me via my social media. Or you could reach out to my Big Ones team, and we could definitely share with you a lot of new opportunities and new insights. So thank you again. Thank you so much.
Hi, my name is Alinga, and today I'm going to talk to you about our latest international project called Purple with Purpose. People probably best know me as the director of the Center for Citizenship, Enterprise and Governance, which is a not-for-profit think tank. We're the world's leading not-for-profit, with a couple of 100,000 members. And we focus, myself and my colleagues, on the dialogue around data. Who owns it? How do you transact it? How do you get value from it? And in that dialogue, we are often seen to compare and contrast. In the West, in West Coast, for example, people like Facebook and Gmail, Google, etc., believe that companies own your data. It's a Western philosophy. After all, they give you the products for free: Gmail, Instagram, WhatsApp. And so they say, well, we give you these products for free, so just give us your data. And we will then use your data to sell you more stuff. And they go also to influence the way you vote, because someone may have paid them to influence your ideology and to nudge you into that voting behavior. In Europe, we have a different approach. In Europe, we go, my data, my way, and it's resulted in GDPR, but all we do is hit cookie acceptance buttons 30 times a day. No one reads the terms and conditions. It hasn't really worked out, has it? In China, and I sit on the government committee from Ministry of Commerce, it's called the China E-Commerce Blockchain Committee, and there they believe data belongs to the government because they believe that government that is responsible for safeguarding society. And they say, look, we have 1.4 billion people in China. We have 72 BRI, One Belt, One Road initiative countries, 73 with Afghanistan. We cannot use individual rights as an instrument. We look after the corpus of society. And in that respect, they use fourth industrial revolution technologies that are data related, like blockchain, like AI, like Internet of Things, like 5G, as a way to actually monitor people and in their respect safeguard them. Now, I was very surprised to hear in February this year, 2021, from a guy called David Proud, who pointed out that there's a large proportion of society representing, a bigger community than the population of China, than many religions like Islam and Christianity. Bigger than those communities that actually whose data is not monitored or tracked because they're not considered to be of worth to society, which is extraordinary. And it's a real failing in our society, isn't it? That a huge proportion of society is considered so misaligned to the mainstream that they are not either assisted or safeguarded in the way they use their data. And it does represent, at the same time, simultaneously, a massive opportunity, which I think we should all grasp, because this is like a portion of the world which has been ignored. And that is, of course, the disabled community. The disabled community, whether it's physical, with mental health, visible or hidden disabilities, represents around 20% of the world's population, around 1 billion at least. And so you have to say, wow, how is it possible that in this day and age, a fifth of the world has been ignored in terms of their contribution to society, in terms of their validity in society, and that the fantastic resource that we have failed to capture. Yet it affects us all, doesn't it? I have disability in my family, immediate family, my own family, in my extended family. You will probably know people who are disabled, and you yourself may be disabled. Or it may be that you know someone, in the media who is recognized as self-identifies as disabled, and these are, many well-known people, or even other people who are actually have disability within their families or extended families. So this is not a small issue. This is not a very niche problem. It's actually amongst us all, and it should garner all our support. How big deal is this? Well, in terms of spending power, UK recently upped their figure from 249 billion in a year to 274 billion. US represents something like $600 to $700 billion, and globally it's around $13 trillion of spend. Now, that's not an insignificant number, is it? And in any other sector, this would be considered an incredible untapped resource. and will attract much attention. And it says something to our core values that we have chosen globally to ignore it. And I think this is something we'd like to redress. It's, after all, bigger than the Chinese market. And the retail sector, in fact, is very closely aligned to this new approach, this closure on ID, of identifying niche people and niche communities, getting to know us through our own data, and to have services and products which are aligned to our destination and what we value and to our values. And so they want to personalize their products to us because they believe it brings them greater loyalty as well. And we will call this purple loyalty moving forward. So our mission, overall mission, is that if data is used in the West Coast, in the West, for corporates to sell us more stuff or influence us, and in East to whether you want to safeguard us, and some will say control, then why not use our data through the Purple project to actually nudge society into a better place? Why not nudge us to better behaviors, better sentiments, better society? And so that is the essence of what we're trying to do. And we believe it will lead to much amazing steps in terms of circular economy, both financial benefits, of course, where retailers will be able to target and provide discounts to that community, but also then they will have more revenue streams themselves, and it will help us overall establish things like Purple Foundations, who represent 20% of the world, but also, and perhaps more importantly, or of equal importance at least, a non-financial circular economy, which talks about our data, of our intangible data of kindness and customer ratings, and the way we view and treat disabled people, and the way they feel as they're being a game changer in our society. And so these circular economies, which can now be measured, transacted, and delivered, we think will be transformative in the way we go. So we have developed a project which will launch shortly in the last quarter of 2021, looking to do the pilot in spring in 2022, finalize the findings ourselves in autumn 2022, and then launch it properly following the findings to revamp in 23, and internationalize it 24 and go forward. And of course, it's a marathon, it's not a race. This is not a small thing. It's part of the United Nations SDGs 2030, so we want to get this right. We're not, this is not completely commercially driven at all. And some parts of it, ultimately we think 5G will have a great part to play, because you see, 5G is about data layers. And by data layers, I am talking about someone who's disabled, goes into a cafe and does not have to say, "Hi, I'm disabled," or show a QR code or self-identify, recognize themselves. The fact is, through 5G technology, they will know through that data layer has entered the premises. They will know they can get automatically the right discount, automatically the right services. And so as 5G rolls on, these things can be integrated far more into our society. And the team that we've brought together, we're really proud of, I have to say. The whole thing was inspired by David Proud, the founder, who's an award-winning writer, an actor in the UK, writes for the world's leading series on television called Coronation Street. which is like an institution in the UK, but has been going many years. And he inspired us to operationalize this, and so we were very happy to bring our services to his vision. People like Julie Fernandez, you will know from hit TV series The Office, and many others, have been brought in. Like Alison, who was heading up Citibank and JP Morgan over in Asia for many years, and Bill from the retail sector, from multinational, multi-drop retailers around the world, and including Simran, who is a lawyer focusing on compliance, legal, and risk, based in Singapore. We have Pamela, who focuses on, she is a mainstay in the Caribbean disability community and is looking at diversity in that area. Antoinette, who is bringing her finance and governance as company secretary and accountant to us, because this thing has to sustain itself and be sustainable and scalable with her skills. And Georgina, who is going to focus very much on the idea of microchips, which she's developing for the art sector as well. The idea of microchip came from something we developed called microshares, but now relabeled as microtips, that we should be able to tip, not financially, but emotionally, other people through who make us feel better. And so we think the Purple with Purpose project is at the core of that world-changing idea. We want to do a pilot project first in Cambridgeshire. And that is Cambridge, you will know, the city where the university is in the UK, and it'll involve all the sectors, the public sector, local government, corporates and retailers, civil society, third sector, and of course the communities, including the disabled community. And the focus will be to test some of the outcomes of our thoughts and to find what works, what doesn't work, and from that we'll be able to provide a much better final solution going forward. This is a groundbreaking project, and it's in international dimensions, and we are looking for people and institutions, organizations to join us who want this to happen. And part of that is use of blockchain. I was the world's first professor in blockchain, and we back in 2017 dropped onto the market a new kinds of blockchain. Blockchain is a movement of digital assets from A to B. Many of you may know it as Bitcoin, but actually it's just a movement of any kind of digital asset. And of course, money is an asset. Bank, things like land is an asset, gold is an asset, diamonds are assets, but so is love, happiness, hope, generosity. And these are the core sentiments at the heart of the disabled community. And if we can get this right, the disabled community will be pioneers in the global change. Especially post-pandemic, this has become of greater importance. And so we developed a block of value which contains both tangible, hard financial value and intangible, soft, non-financial value. And we're suggesting we use this for the pilot. It may not be appropriate for the full rollout, but we've got to start with something which is compliant. We did it with the FCA, Financial Conduct Authority oversight in 2017, and so we believe in compliance. And the second aspect, of course, is this idea of microtips, of what we use called microshares, that the way we want a transactional way, not with money, but with acknowledgement of the way someone in the disabled community has been treated by retailers and by society, how to thank, how it can scale from our thoughts through to our personal value and values into the organizations we operate in, into the regions we live in, into the nations that represent our values, and into the world as a whole ecosystem. And this is, I'm excited that the disabled community can be the heart of a change in society. And this change has become more important since COVID, hasn't it? COVID shocked us all that money actually isn't the most important thing, if of no use if you're dead, and that health matters more, and that our families matter more, and spending time at home matters more, and being out of cities matters more. And so it has changed, and we think this is aligned to the new value sets post-COVID-19. And so that we don't spend time all on development, we are using an existing retail ecosystem which we developed in 2018, at the end of 2018, which has QR codes and mobile apps and loyalty discounts, gift cards, etc., based on blockchain technology. And we will use that to learn in the pilot what works and what doesn't work, and discard items of it that are no longer relevant or not compliant with legals these days. Finally, the project itself, financially, is a not-for-profit project, so half of it, the contributions will go towards the foundation we wish to set up, and about a quarter through our operations, and a quarter to the investors who are going to make it happen. And of interest here is this concept of setting up the Purple Foundation by 2025 or soon after as a DAO, a distributed autonomous organization. That's an organization without directors, without shareholders, without hierarchy, simply where everyone who is disabled in the world has one vote. And this, we believe, can be an enlightening idea of representation and democracy going forward in society. So I'm going to leave you with these words from David, who inspired myself and my team here at CCG. And I'd like you to read it, reflect on it, and wonder if this is something you'd like to help and contribute to make a better world, where we can nudge through our data, into a better world. Because after all, the currency of the world is no longer money. The currency of the world going forward is data, sentiment, and ideology. And so this fits very well into our latest institute that we dropped onto the market in 2021, the Ideology in Code Institute. But we call it the home of total value, meaning both financial and non-financial value. We have been doing this work for over 10 years, actually, over a decade. And we've been doing it for many leading companies around the world. And certainly it's captured the zeitgeist of this decade. We feel extremely proud to be associated with the Purple with Purpose project. It represents the essence of what we're about. It is our highest achievement if we get this done correctly. And it excites us. We think this is a project worthy of us putting all in. We are certainly purposefully ourselves driven, as is this project. And we'd love you to join us to make this happen for the world and for ourselves, our society, and for yourself. Thank you.
Hello, everyone. My name is Vitaly. I'm the CEO and founder of App Labs. And today we will be speaking regarding automating KYC and onboarding to enhance the customer experience. Let's start. KYC today is a significant element in the fight against financial crime and money laundering. And customer identification is the most critical aspect, as it is the first step to better perform in other stages of the process. KYC, or Know Your Customer, is a set of operations to identify an existing user. Usually these operations have like the next stages: ID card verification, face verification, document verification, such as utility bills as proof of address, and also biometric verification. Also, you can see here the agenda for today. The first step, why is KYC important? Who needs KYC? Challenges of traditional KYC, main principles of automating KYC, solutions for KYC optimization, the main problem for recognition technologies, and KYC in different countries. So let's proceed. Why KYC is important? First of all, we understand that it helps identify and prevent money laundering, terrorist financing, and other illegal corruption schemes. KYC covers a host of legal standards and regulations which businesses need to comply with. For example, anti-money laundering and customer due diligence. Second of all, KYC, the customer's identity needs to be verified by banks and financial institutions against public record databases before users' accounts can be opened and transacting through the system. That usually includes different checks, like checks in the list of terrorists or sanction list, and other politically exposed people and people under sanctions. According to regulations, banks and financial institutions need constant monitor existing customers on a frequent basis to identify any risk connected to them. KYC can be done via offline or online channels. Let's have a look what the difference between those channels. Offline channel. In this way, the customer should download the onboarding application. He or she fills in the details in the physical document, signs the document, and submits it along with the copy of required document and paperwork. Online channel. Here, the customer uploads the required documents and fills in the details required in an online form. And all documents and the person will be verified either automatically or by manual reviewers. So online channel could be divided in two different processes: automated process or a manual process. Speaking regarding the goal of automated process, it's well understandable that if the system verify everything online, I mean the user will receive the better onboarding process and faster onboarding process. So for all of our software that we have done for our clients, the goal is to optimize the percentage of the users that can go through the KYC process automatically. In this process, we have like few different stages. First of all, it's like document type identification, document ID reading, face matching between the user who is going through the process and the document that this user provides. It could be done like through the 2D and 3D liveness detection. And also we should verify whether this person is a politically exposed person or not. If there is any issues, then we should send the person to the manual procedure. Manual procedure usually done by a reviewer who can schedule the call with the client and go through these steps during this call. Well, to validate documents, to validate that the person is real or not, we had actually some cases when our system identified that the document that provided by the user is the document that usually the person in prison can have. And in these cases, our system for sure will send to the manual verification to understand that this person is not in prison. Also, our systems that we have done verified many other interesting cases I will share with you later. So let's have a look who needs KYC. First of all, we understand that many financial institutions like banks and credit institutions, insurance companies, also fintech service providers, e-wallet services, e-currency services, mobile or digital banking, foreign exchange brokers, digital or cryptocurrency exchange platforms, and other, including like even estate agents, legal professionals, assets manager, and many, many others. Let's have a look at some cases from our experience of using 2D and 3D liveness detection. First of all, I should mention that 3D liveness detection usually should be in use when the user has issues with the internet or the internet connection is not very stable. And 3D liveness detection usually in use with the more stable internet providers and internet connections. Regarding these processes, 3D liveness detection usually creates the 3D mask by moving the face in the left, right, or so on by user. Speaking regarding 2D liveness detection, it's more about taking the picture with the person and his or her documents. Usually, we found a way that for the 2D liveness detection, there are a lot of the cases when the person tries to make a photo of another device. That's why we found a way that if we pre-record or record the small video stream before taking the picture, we can understand whether the person is trying to trick the system or not. And it helps a lot for many different solutions of our client that we have implemented. Speaking regarding 3D liveness detection, this approach is more accurate. The percentage of accuracy of 3D liveness detection is around 85%, which is very high, I would say. Also, we have done a lot of different software for lending platforms, and we had a lot of interesting cases in there. In our practice, we had an example of people to take the credit being in a prison, and we implemented these solutions in the way that they managed to identify that the person is in prison or not, based on different aspects like clothes on the person, the type of the document that the person provides, sometimes whether the person has clothes or not. We had also cases when the person tried to go through KYC without having any clothes, so they were banned. Also, we had the cases and managed to recognize them when the person was beaten to take a credit. So we implemented different solutions in a way that they can understand whether the person has some bruises on their face or not. And that helped a lot for many our clients. Also, speaking regarding our experience, we have done different approaches for many different clients. So we did even integration for KYC process with worldwide services like FaceTech, OS4NCs, or Veriv. And also there were solutions that we have done everything from our end. Sometimes we were using open source libraries like OpenCV, TensorFlow, or Keras. So with different set of the third-party libraries or services, we have done these cases and covered many interesting cases for our clients. Let's have a look at challenges of traditional KYC. And the first one is changing regulations. We all remember the GDPR compliant, which was released in May 2018 regarding transparency of holding customer sensitive information. Also, according to the European Union fifth anti-money laundering directive released in January 2020, all platforms offering exchanges in virtual or cryptocurrency will be the subject to stricter controls. Exchanges are now required to register with the relevant competent authorities and conduct customers' due diligence to comply with anti-money laundering, AML, or KYC. The second challenge is lack of all-encompassing technologies. Outdated legacy systems or lack of the proper system require a lot of intensive input. And not all banks or financial institutions can meet KYC regulation easily at this moment. Also, the challenge is a high costs. Major financial institutions have reported spendings anywhere from 50 millions to 500 million US dollars per year on KYC and AML and due diligence cost. The true cost of KYC includes internal salary wages, third-party identity verification, technology development, third-party licensing, regulatory fines, and costs of remediation.
KYC is time-consuming process, and typical KYC requires verification of different types of the documents. For example, for identification and verification of individuals, there could be in use like passport card, driver license, debit or credit cards. Regarding proof of address, there could be in use also different types of the document, such as utility bills, bank statement, rent agreement, tax bills, insurance agreement, or others. Also, the next challenge is time for digital transformation. We understand that the most efficient way to do the KYC is to do it online and automatically. However, many institutions still require an offline process, and they do this manually. So they need to transform their approaches and processes and go to digital. The next challenge is inconsistency. The various documents requested differ among banks, regions, and countries. So as we had a look at the different types of the document, for example, for proof of addresses, there could be bills, utility bills, bank statement, rent agreement. That means that data could be structured in a different way on these documents, and the systems should understand them, validate them, and only then finalize the KYC process. And the next challenge is security. We understand that the data, the client's data, will be stored on the software end, and there is, as usual, the issue regarding management and storage of that data.
So let's have a look at main principles of automating KYC. Let's imagine that you would like to build it from scratch and you just would like to understand how to do the first step. So first of all, measure the current KYC process. If you implemented this KYC process in the first time, you should identify some KPI for your process and measure whether it meets them or not. For us, the very important part was the percentage of the users that goes through automation process without the problem, without going to the manual verification. Understand your requirements. So as we have done many different products for different markets, we understand that requirements is the key. For different markets, countries, regions, there could be some specific requirements in terms of the documents which should be in use, in terms of the data, and so on. So that's for sure the key for you. Use a cross-functional team. So you should understand that you need representatives from across operations, compliance, and technology, because all these three parts will be connected together to build just one solution. Don't underestimate the data challenge. So yeah, the data is a huge challenge, and you need to understand that your KYC process need to be focused on the data, user data, and should be very well with them, understand, recognize, and so on. So that's the challenge for most of the systems at this moment. Agree with third-party approach. Here you should understand whether you would like to build everything from scratch or just integrate with existing third-party services that will help you to cover either some parts of KYC, either optimize it completely. If you remember, I mentioned different approaches that we use, like FaceTech or OpenCV third-party libraries. With the different approaches, we manage to provide different cost effectiveness of this KYC process, cost and effectiveness, I would say this way. And the last rule, test again. If you finish your KYC, you can bring additional number of the users to test and do it like a couple of times, because the testing is most important part of KYC. You don't want to launch the product that won't work very well for your target audience. Of course, there are a lot of the solutions that can help you to optimize the KYC. For example, there are solutions for remote customer identification, identity mind accurate Trunomy, for fingerprint identification, transmit security, Sonovation, for the verification of customer bank accounts, which could be done through the Plate. Also, there is many different anti-money laundering automation tools for different regions and markets. For USA, there is Equity. For UK, Comply Advantage. For France, it's UDeal, and many other solutions that can help you to optimize your KYC or delegate some task of your KYC flow for sure. Let's have a look at the main problems for recognition technologies. Probably you understand that the performance of Face ID systems outside a controlled environment is affected by many factors on the user end. All of these factors, they impact the result of identification. The first factor is lighting. A lighting condition should be bright enough to reflect all facial features, but not illuminate them. Also, the position of the head is very crucial, and the face can change when the head is turned. The next problem is the face expression. A neutral expression is ideal for accurate recognition. However, human emotion and mood impact facial face expression. The next problem is aging. Neutral age-related changes in a person's appearance also affect the ability of facial recognition system to authenticate people. Cosmetic intervention and style changes. So changes in appearance due to plastic surgery, makeup, hair changes can negatively affect the accuracy of recognition algorithms. Another item is accessories. The presence of various objects on the face, like glasses, bird, and other or variant accessories like hats, scarves, can seriously affect the recognition system. However, the modern algorithms are working out the ability to see through those objects, and even we have implemented a lot of the product that work very well and can recognize the person that wears some accessories. The next problem is special masking to device recognition system, and that's the bigger problem, I would say. There are accessories, a combination of technology and fashion, that can outsmart the recognition algorithm.
For example, lens-like masks, their curvature blocks the face recognition from all angles. Also, there is the projectors that can overlay the image of another person on the owner's face. And even there are glasses with infrared LEDs, special makeups, and other items. The next problem, the masks. After the introduction, the quarantine, a lot of people start wearing the medical masks. And for sure, if the person who will be going through KYC process will be wearing the medical mask, the system won't be able to recognize him or her because the mask will cover the most part of the face. However, I would like to share with you regarding our experience and building different KYC system for, let's say, lending tech products that we had. You as a company can choose which KYC process should this person have in their case. For example, we had the cases when the person would like to lend small amount of money. And in that case, we ask the person to go through the small KYC process and ask only their bank ID. However, if the amount of money that this person would like to lend will be more than limitation, we should apply the liveness detection procedure or ask the user digital signature. Speaking regarding liveness detection, it could be 2D or 3D, depends on the internet connection of this person. KYC in different countries. Let's have a look what we have in some countries in Europe. For KYC, the two most relevant pieces of European legislation are the GDPR and the fifth anti-money laundering directive. For example, in Germany, the requirements imply fifth anti-money laundering, also known as the GWG. Spain requires enhancement liveness detection for KYC. For KYC in France, you will be required a secondary ID document to verify a person. Italy requires 7 additional risk checks. Also, up to 70% of customers use a paper ID there to pass the KYC. From our experience, we also would like to share differences for KYC in different countries. The first difference is biometric identification. For sure, we should understand that there is big changes in users that will come from one region or a country or another, because the facial features of those people could be different. For example, if we say that through the system will be passing a lot of Asian people and European, the algorithm should be able to recognize these two different groups of people. So that makes additional changes. Also, local regulation, we just mentioned on the previous slide. For sure, for different countries or region, there will be different integration with their verification or bank systems to understand that the document is valid, this user is a real one. So probably you should understand, if you would like to build your system, there will be a lot of challenges down along the road, which you will face, and you should be ready to them. However, we have done a lot of the product for our clients, and we have passed them already together with our clients. At this moment, I would like to say thank you for your attention. I will be happy to answer on your question. You have my email address, LinkedIn profile. You can use this QR code to get in touch with me. See ya.
Hello, my name is Roberto Capodieci, and I will talk to you about decentralization and blockchain. Let me start with something we all can relate to. We all have been through the ICO craze. We all have heard that these startup pitches going like, we are a customer-centric organization and we deliver the value of IoT, cloud, big data, machine learning, and artificial intelligence by using design thinking to drive digital transformation for blockchain-connected enterprise. Then you wonder what they do, and at the end it's just another token. We have launched this new token called Decibel Coin. How does it work? You just yell into your microphone to get money. It is, ready for the pun, it is a sound investment. Okay, let me make an NFT of the joke and sell it on OpenSea. Let's take a look at how we got here, so that we can better understand where we are headed to. We are living in what is called the information age, also known as the computer age or digital age. Humans have been through the Stone Age, the Bronze Age, yes, I'm starting from the beginning, and is in the Iron Age where technologies start being developed. I'm not saying that cavemen were building microchips, but an ongoing evolution of some rudimental technology led to what a couple of thousand years later became the Industrial Revolution. The Industrial Revolution is divided into subsets. For the developers, we're talking about arrays of arrays. So there is the first Industrial Revolution based on steam power used to mechanize production, the second Industrial Revolution based on electric power to achieve mass production, and the third Industrial Revolution based on electronics used to have a smart production. And now we are in what some call the fourth Industrial Revolution, but I prefer calling it the information age, that is based on data, information, used as service and product. The information age is also divided in subsets. Again, for the developers, we're talking about arrays of arrays of arrays. We had the initial phase where analog content started being stored and shared in digital format, a second phase where this digital content could be sent and enjoyed over networks and eventually the internet, a third phase where services are sold and provided by individuals and companies through the internet, and the fourth phase, which has just begun, where those products and services are offered by the community to the community, the decentralization phase. Now to the point. Soon, protocol for decentralized system will start replacing those of centralized web services that currently dominate the internet. When rather than connecting to the API or some central provider, our application will interact directly with a peer-to-peer network, we will be a step into a decentralized internet. When, rather than connecting to an ISP, there is effectively a man in the middle between our computer and the rest of the internet, we will connect to a random hotspot of a global mesh network, then even the internet as infrastructure will be decentralized. There are several tools to decentralize, and blockchain is one of the prominent technology currently used. We all know that Bitcoin, while it has the merit to have brought to us the concept of blockchain, is just one of many decentralized services that can be run on a peer-to-peer network. The adoption of blockchain is moving beyond cryptocurrency use cases. This is happening because blockchain protocols are open and anyone can implement on top of them, clone them, modify them, and most importantly, make them better. Here is a quote from Fred Ashram. Blockchain are digital organisms. As organisms evolve through changes in their DNA, blockchain protocols evolve through changes in their code. And like biological organisms, the most adaptive blockchains will be the ones that survive and thrive. Please note that we're talking about bottom layer blockchain platforms, not the application developed on top of them. The need to evolve is big. Most blockchain technologies, consensus systems, transaction types are thought of with a cryptocurrency in mind. This goes down to the core of how a blockchain is secured, making this platform weak and prone to attacks if adopted on non-cryptocurrency related use cases, or when managing titles of a value higher of the blockchain internal economy. In simple terms, those blockchains are secure until the return of investment of a cost of an attack makes the attack viable. For example, using current consensus systems, blockchains that are susceptible to attacks are those that manage title worth much more than the blockchain own market cap. For example, ownership title like warehouse receipts. And those used to decentralize the management of data with no real need of a cryptocurrency. For example, documentation flow, such as medical records. To decentralize and be really decentralized, a blockchain should have no administrator, no central controller authority, or even no influential charismatic leadership. In a blockchain, each user owns and controls their data. The blockchain replaced the need to trust a third party with the cryptographic proof of what happened, when it did happen, and the guarantee that it did happen following the protocol rules hard-coded in the blockchain core software. A transaction that does not respect the rules is not processed. I cannot send 10 Bitcoin if I don't have them. Blockchain must be seen as a decentralized system with tools to cryptographically secure data transformation. Blockchain provides the possibility of having scarcity and thus even the singularity of digital assets, something that in the digital world was impossible just a decade ago. Blockchain makes it possible to reach a consensus about the current state of a piece of data without having to trust any third party to tell us what the current state of the piece of data is. Blockchain has the potential in the near future to fundamentally change how we share information, buy and sell things, and interact with each other and with the institution. We will use blockchain to prove our identity and even verify the authenticity of everything, from the food we eat to the medicines we take. And most importantly, people will own and control the data that belongs to them. We all know the hidden layer technology, think databases, are often the hardest for users to relate with, as they're invisible to them. This is a problem for blockchain as well, and its adoption has been made worse due to the often negative association with illicit activity allegedly done with cryptocurrencies. A good narrative is necessary to accelerate blockchain adoption and gain the needed trust for technology to be accepted in multiple industries. Furthermore, blockchain is like the new cloud, big data, or artificial intelligence. Too many people are using it as a buzzword without even knowing what they're talking about. Blockchain should be used to solve real problems, but unfortunately, it is often forced in projects without a real need for it, just for marketing purposes. A real working decentralized system has no centralized ownership or point of control, and it belongs to the people running its peer-to-peer network nodes. Companies that create a real decentralized system hand them over to the public, remaining with no control over it, besides maybe owning a big chunk of its economy. The node application code is in the hands of the open source community, and the full project is public. Once the system is public and its code is open source, then the project is really decentralized. The public members who support the funding of the project directly contribute to the development process done by the open source community. Those that run a node of the system peer-to-peer network are contributing to the system itself by running the network, creating collective value, and strengthening the system. They should be monetizing from the user activities. When users pay for a service consuming the peer-to-peer network, those payments should be split among the peer-to-peer node owners. Node operators need in fact to be compensated for the processing power and cost which they have allocated to run their nodes. Current systems reward only the accounts that create the new blocks, while the rest of the network remain uncompensated. The way to go is reversed. Punish the accounts that do not create a block when they should. Let's pay attention. I'm not saying that there should be no way or opportunity for businesses to monetize on the decentralized services. What I've been talking about until now is the lower layer, the blockchain platform itself, which needs to be really decentralized. Yet, decentralized application built on top of an open and public blockchain may have a central point of control, an administrative account, user levels, and specific monetization method. There is a world of services to be implemented and that are being implemented, starting from hybrid apps that use blockchain just for some of their processes, to DAOs, applications that are fully working on the blockchain. Many of these decentralized systems will replace existing online services and applications, but others are new and will never have to have the chance to exist if a decentralized platform to run them didn't exist. Blockchain, and more widely decentralization, offer great opportunities, and we need to focus on and use those when deploying new projects. Let me tell you the story of what I believe is one of the biggest missed opportunities when it comes to decentralization in recent history. We all know what torrent is, right? I'm sure none of you has ever done this, but torrent is a peer-to-peer protocol for a network mostly used to download pirated movies and music. Well, torrent is decentralized in its nature as it is a peer-to-peer network and is the first file sharing system authorities have not been able to shut down. Torrent is at the basis of what a blockchain is today. A blockchain cannot be shut down if it runs on a solid protocol. As I'm heading to the end of this talk, as promised, I leave you with an interesting story. Title: The Missed Opportunity of the Music and Movie Industry. Consumers always bought music and movies, and those with a more criminal mind made copies of the music cassettes and VHS tapes to their families and friends. This behavior was tolerated as the loss of quality of the audio and video in analog copies made the chain of copies quite short. Flashback to the beginning of the speech. As we entered the first phase of the information era and content became digital, people started making copies of CDs and DVDs. At this point, there is no loss of quality, as digital copies are as good as the original. For this reason, digital copies were much less tolerated. But it got worse. Huge drama, screaming, people running desperately in the corridor of the music and movie industry office, management pulling air off their heads. I'm just guessing. As soon as we enter the second phase of the information era, and digital content can now be copied over the internet. The music and movie industry lobbied the government to shut down any website, forum, and online file storage that was used to trade pirate content. Napsters have been the last to stand. The music industry litigation worked against them, and Napster was served with an injunction and shut down its server in 2001. But then torrent came along, a peer-to-peer network that simply cannot be stopped. The music and movie industry, now together with the software industry, as software piracy over peer-to-peer network were also rampant, lobbied the government to arrest the final users, calling them pirates. Under the US law, IP infringement may result in up to 5 years imprisonment and $250,000 fine per item copied. While copying one song or a movie counted as one infringement, illegally downloading Microsoft Windows, for example, meant an infringement for each application in it: the calculator application, the notepad, the solitaire game, and so on. Young kids end up with multiple life sentences just for downloading pirate software over the torrent. Now I ask myself, did this move made by the music, movie, and software industry accomplish to stop piracy over the peer-to-peer network? No. Did the movie and music industry gain the sympathy of the general public, making arrest of little kids? No. They were too focused fighting the wine mills. If you don't get the analogy, go read the Don Quixote, a novel by Miguel de Cervantes. And they missed what I believe was a great opportunity. The possibility to sell all the ever created content everywhere in the planet, from big cities to the smallest village in remote countries, through a network they didn't even have to manage or pay for. They just needed to share via torrent, DRM, digital right management, locked content, provide free preview and the means to pay them to unlock the DRM content. They had the perfect way to serve and they missed it. As Bitcoin and we did the blockchain came along a few years later, the disrupted industry wasn't the one of the music and film, but the world financial sector. I'm glad that this time the reaction has been different. As we see, there is support for innovation in the financial sector when it comes to blockchain. So let's surf this magic wave all together, as there are tons of opportunity and we have a lot of work to do. Thank you for listening. Till the next time.
Your heart and you will feel proud. Save it in the blockchain, share it with the world. Permanent.